Hello, welcome back to Lucid Trading. It is Sunday today, and in about 3.5 hours from now, the futures are going to be opening up, and we will know what is going to be happening with the markets, at least speculatively. But yeah, welcome back to everybody out there. Make sure you hit that like button. That'd be great. We're going to be streaming for about 30 minutes. It won't be a very long stream. That's why I put it in the title. This is going to be a quick weekend stream. After that, we're going to do a Q&A live stream for the patrons out there. We're going to do this more often, so anyway. Welcome back to Derry, the Tech Freaks, Paul, Tanisha, Justin Barnett, Paul Gurnitz, Vincent, Alan Bereni, and Jesus. Welcome back. Hit that like. Let's get that going. Obviously, I wasn't streaming on Friday. I'm so sorry for that. It was my sister's birthday, and I had to attend that. Just had to. Family matters. But that's no excuse. I could have done the second live stream. However, usually I usually don't do the second stream on Friday very often. And also, I decided to spend some time with my clients. The one-on-one session clients that I have that I talk to, doing technical analysis with, because it was a very bumpy day. Markets went down substantially, like 2.5% to almost 3 percentage points. So I thought might as well just call people up, just see what's going, how everybody's doing. And so I didn't have a lot of time left to stream. Very bad excuse, but hey, things sometimes go the way they go. But yeah, right now, looking at the markets, I mean, my gosh, look at this. NASDAQ is down about, that is from top to bottom, down 7.2%. We're now down about 6.3 percentage points. Do I think the bleeding is over? I think it could very well be the case. There's a high probability that the bleeding is over. Keep in mind, we had a correction of about 8.3 percentage points just recently. That was in September to October. The correction that we had before that was about 8%. That was in April to May. And the correction that we had before that was about a 12% correction. That was from February and March. So we have had a lot of corrections. We've also had a lot of upswings. So I don't necessarily believe that this is going to be some kind of crash. I think the market is taking some breathers every now and then. All that is happening right now is, like I've said before, this is the tax harvesting. Before the year end, a lot of hedge funds and institutions, they're trying to find reasons to sell because to lock in those tax losses, so they don't have to pay taxes over that. And furthermore, I would also argue that there's been a lot of fear in the market, with the Omicron variant and with, the tapering accelerating, with interest rates potentially going up. Nobody knows if it's going to happen. It's just the fear is feeding on of itself. There's a lot of leverage in the markets as well, a lot of margin debt. A lot of people are buying calls. A lot of people have been buying calls, and a lot of people have been leveraging up on margin. And so what happens when we have these tiny downturns, they turn into very large downturns. So that's the effect that we're seeing here as well. So this margin calls, feeding on margin calls, and then just kind of goes down in that fashion. So I don't think this is a crash. This is going to be another correction. But I still think that it's a good time to be buying the dip because this is a support zone. It could bounce from here. And if it doesn't, let's say the market goes down further, we go back to the trend line. It's about 3 percentage points, really, this is going to be the long-term trend line. You can see this right here. We've bounced off the trend line several times, and I think it might happen again. That, I think, is the worst downside that we're going to be getting, which doesn't have to happen, right? There's been a trend of the downturns becoming less and less and the upswings becoming more and more aggressive because there's so much liquidity out there. A lot of people have capital on the sidelines. We have inflation going around. So if you're holding cash, inflation is going to be eating up that capital. Products are going to be getting more expensive. And really, we still have the monetary support, right? Despite the tapering, the Fed is still printing tons of money. Interest rates are near zero. We're seeing fiscal stimulus still. And there's so many tailwinds still in the markets where I would say I don't think it's a wise idea to get completely out of the markets, but if you had some profits, I think taking some profits off the table is obviously smart. I've been saying this for a long time. You got to have at least 20 to 30% cash in this market because the market is overextended. We are entering bubble territory. It doesn't mean it's going to burst. I think we're entering that territory, and I think you just have to be very vigilant and you have to be cautious. So I've been holding a lot of cash, as you might know. I've been talking about this for weeks, that I've had like 30% cash, 40% cash. And this, for me, was an opportunity to buy the dip. And I've been buying aggressively, right? I've been shopping. I've been buying stocks like Robinhood. Look at Robinhood right now. My gosh. Robinhood sitting at 21.55. Look at Virgin Galactic sitting at 14.4. Sheg, 28.5. Bumble, 31.7. Uber getting back to 35. So there's a lot of opportunities out there to be getting some discounts here on these really, really good companies. And there's also a lot of FUD. There's so much FUD. Oh my God. Anywhere you go, FUD, 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 FUD. The news media, everything, right? Jim Cramer, even me, Kevin's been just going all bearish, hyper bearish. Everything is going to crash. The world is going to end. I don't think that is going to happen. I think what is going to be happening here is we're going to see a correction like we always do, and then it's going to bounce up from there. And so long as we don't see interest rates go up, so long as we don't see the taper accelerate too much, I don't see this market really coming down more than 10%. That's it. So yes, if you buy right here, you might lose 3%, right? So that would be around 3%. But if this bounces up, you're going to be up, let's say we get a rally until the end of the year, which we have been expecting. That's about 7% up on your investment. And not only that, obviously we have next year as well. The next 6 months, at least from what we think, the Fed is still going to be printing money. We still know that the interest rates are going to be at zero. We got the fiscal stimulus coming in 2022. And business has been good. It's not been terrible. So we had several corrections. I think we're now seeing the deleveraging happening, which is a good thing. We're getting a bit of a breather here in the markets. These are very positive things. I don't think this is bearish. I think this is very positive. It's just going to be a matter of time until this is going to bottom out. I hope it bottoms out in this zone because of it. Obviously, if it breaks this little trend line that we have a bit of a problem going on because that would be an indication that we're going to be downtrending for some time, and it's not just going to be this short-term downturn. It's going to be something like this, perhaps, which would be kind of painful. And a Head and Shoulders classical pattern. I just don't see that happening yet. I don't think we have had enough bearish news yet for us to see an extended downturn, which would be 15 to 20%. And a lot of people are referring to the 2018 downturn that we had for the NASDAQ, which I can show you right here, which was the taper tantrum, where the markets just kind of overreact. Well, markets reacted to the fact that the Fed was raising rates earlier, sooner, and more. And you can see what happened to the market right here, down 24 percentage points. However, it is important to keep in mind that back then interest rates were sitting high, right? The Fed has been back then they raised interest rates 4 times. What is happening right now? We have a money printer that is essentially printing like an infinite amount of money. Well, not infinite, but it's still printing a lot of money into the system. Bonds, MBS, private securities, and we also have 0% interest rates. So what is there to be fearful about, really, other than cashing in so you have some cash on the sidelines? You gotta have some cash on the sidelines. I've been saying this the whole freaking year, right? And it's incredibly frustrating to see that like people are panicking, whereas if they would have had cash on the sidelines, they wouldn't be panicking. They would be very happy and delighted to see stocks go down because you're getting a substantial discount in beautiful names. So I'm very saddened about that, but people can become a bit impatient in this market, which is I've been there. Like 4 years ago, 5 years ago, I made these mistakes. But yeah, this is the time to have had cash on the sidelines and to be able to benefit from these dips, right? So to be able to benefit from this dip if this happens, right? If it doesn't happen, right, we'll probably go up aggressively and get back to all-time highs by the end of the year. That is your Santa rally. And then we get back, we get above that all-time high. We might touch 17K, which would be pretty phenomenal. So yeah, I think it's interesting how people like to sell at the dip. People like to sell at the dip. They like to sell. They like to buy at the top. It's always been like that, right? You got to do the reverse, right? A lot of people were buying right here. I was warning. I was like, guys, please, this is getting ridiculous. Market is getting overextended. It's about to correct. We had extreme greed sentiment back then. That was like beginning of November. People called me crazy. People were like, no, the NASDAQ is going to go to 20,000. This time is different. Well, this time was not different. The market started correcting. The same thing happened here in September. I believe I was warning in August, like in this zone right here. I was like, guys, we're getting overextended again. Extreme greed. We're hitting resistances. Be prepared for a downturn. And, well, I'm not able to predict these things on a day-to-day basis exactly precisely, but I would say on a week-to-week basis, we've been pretty darn accurate. Obviously, you don't exactly want to time the market. You just want to be conscious that the market just doesn't go up all the time and it doesn't go down all the time. It works in these cycles, and you want to be benefiting from that. All right, so we have about 20 minutes left, so let me see what I can cover in these 20 minutes. I want to talk a little bit about the 10-year yield. Oh my gosh, the 10-year yield is going down again. And what does that mean for us? This means that there's a lot of fear. There's an incredible amount of fear in the market. And you can see that the 10-year yield, well, the MACD is crossing to the downside. That is indicating momentum is to the downside. It's very strong, right? So people are buying bonds like crazy. Look at TLT. TLT is rising very fast. The 20-year, these are long-term dated bonds. So when bonds go up, yields go down. What happens when yields go down, right? Have we forgotten? When yields go down, it becomes very difficult for institutions and hedge funds, individuals, investors to find proper investments to invest in. Growth stocks might become attractive again. And while right now growth stocks are selling off, I think people are going to think twice about selling growth stocks when they know they're down 60, 70, 80 percentage points, right? So we've seen severe sell-offs, right? And Robinhood is an example, right? From top to bottom. Obviously, this is not the best example, but down 75%. Virgin Galactic down about 75%. Even Uber, like, not necessarily the smallest growth stock, down 44 percentage points. You got Twitter going down about 49 percentage points. Sheg, I mean, these are incredible downturns that we've seen, and it offers us opportunities. These are good companies that have been suffering from the mania that we've seen in the markets, right? Everybody just buying and buying and buying, and call options being bought and raising these prices. And now we're seeing the opposite. And suddenly nobody wants to buy, which just boggles my mind. It's like, you want to buy when it's high, but when it's low, you don't want to buy? Like, what? See, this is what I always say. You want to buy low and you want to sell high. And it's such a simple thing. And it's incredible, right? People ridicule me for this. It's such a simple thing. You buy low and you sell high. And it sounds ridiculous, but it's incredibly, incredibly difficult. Because when stocks are going low, every single person that is out there is panicking, convincing you to sell, telling you that you should sell and take a loss. And the news media saying that the world is ending, that there's a new coronavirus that is going to be even more dangerous. And so that is what's making it difficult. It's staying rational instead of emotional. And when you think rationally about this, it's like, hey, we're getting another discount on beautiful companies in a great environment. There's a lot of money. There's a lot of support from the Fed. There's a lot of support from the government. We're getting a discount. But that is not what people are thinking about. People are thinking about the new coronavirus. People are thinking about whatever's happening with China and Evergrande, which, to be fair, if that is going to be very horrible, then yeah, that could have an impact. But we don't know that yet. We can't conclude anything from those things. what we can see here right now today is that we're getting severe discounts. And then obviously, then you have the dollar cost averaging. How do you dollar cost average? Do you just go all in on the dip, or do you nibble at the dip? Do you buy a tiny amount every single time that markets go down? And I think the latter is probably best. It's not financial advice. This is how I do it. I buy a couple $100 every now and then as markets are going down in my favorite stocks. And with favorite stocks, I mean stocks that I think have good fundamentals and a long-term future. And that's how it's done. And I think a lot of people are getting that wrong as well by just buying big chunks, which, to be honest, whenever you see a support being hit, that's when you want to get big chunks in. Whenever it's hitting the trend line, same story. Right here, this is a bit of a support. Right here, this is a bit of a support, on the trend line. And that is where I personally buy more stocks than on a regular downturn. Let's just put it that way. And it's the same story over and over and over and over. I mean, I've been streaming for more than a year now. It was the same story in September. It was the same story in April. It was the same story in February. We can go back, right? The same story in October. It happens every single time. And there will be a time when this is not the case. And then it breaks this trend line and it's going to go down substantially. I still don't think that it's right now because we still haven't gotten that very bearish catalyst, interest rates going up or something along those lines. I still don't think we're there yet. I think we're still in that environment. We're getting close to an environment where interest rates might be going up. We have no more money printing. And I do believe that next quarter's earnings aren't going to be as good as this quarter's earnings because this, it's a bit of a cyclical thing. There is a saying, right? Sell in May and go away. From November until April, markets tend to do very well. December, we usually get a Santa rally. We haven't gotten that yet. Could still happen, right? And it could very well be something like this, right? Worst case scenario, we go down until the middle of December. We have the debt ceiling talks. We have the interest rates confirmed at 0. Then we get the bounce until the end of the year. And that's your Santa rally. I still think that would be considered a Santa rally, given the fact that that's still like a 10% move, which we've seen time and time again. After a correction, the market goes up about 10%. Look at this right here, 10%, 10% plus, right? And so that would be my estimate on this. And this would be the worst case for us to just return back to 15.2K, maybe 15K, and then reverse back upwards. So I am not worried. Not even in the slightest. Until we get more news, obviously, until we get more and more bearish news. So, yeah. I want to just look at some individual stocks that I personally am very bullish on. And in about 10 minutes, I will be leaving because I have to do a stream for the Patreon. If you want to be a part of the Patreon, support me on Patreon, there is a link in the description if you'd like that. We're going to do a stream for the Patreon, a Q&A stream where I'll be answering all questions for the Patreon members out there and the YouTube members. So check that out. Link is down below. Bumble is one of the stocks that I'm still buying. I still think Bumble's very awesome. RSI, very, very oversold. MACD, about to be crossing very soon. And just look at this, right? From the 60s down 50 percentage points. Earnings weren't even that bad. It was just these investors they shifted their minds. They're like, hey, you know what? We're going to sell everything. We're going to tax harvest. And that's how you got a Bumble sitting at 30 now. I do think that it's going to benefit from potential lockdowns because a lot more people are going to be using dating apps and whatnot. Those are the specifics. I still like Sheg a lot because Sheg has recently announced that they're going to be acquiring a company that's going to help them grow. And they're doing buybacks, and my gosh, I mean, just look at how low the stock is right now, sitting at 28.5. These are levels that we've seen in the earliest points in 2020 during the crash, right? During the 2020 crash, we reached these prices. And meanwhile, their earnings have been going up substantially, which is just amazing, right? So you can see right here, 2020, they made $644 million. Recently, they're making about close to $800 million, and yet their price is still sitting at the same at these levels, and 2019, 18, 17 levels, which makes no sense at all. So it's oversold, people panic sold, and it's going to recover to the upside. We've been covering it even since they hit 24.7. It's now sitting at 28.5, going up as the market is going down, which is quite nice. GGPI is overreacting, right? This is happening because people are panicking. They want some cash on the sidelines, so they're selling. I think this is going to bounce up very viciously. It's going to get back to 15. When the merger happens, it's going to shoot to 20, most definitely. Let's see, Snapchat. Snapchat, very oversold, sitting at support zones. I think this could also benefit from the potential momentum swing that could be happening in the near term. Same with Twitter, same story. Beyond Meat, incredibly oversold. You can see that on the RSI, even on the monthly. We're sitting at a monthly support level around the mid-60s. Weekly chart, I mean, it's substantially oversold on the weekly chart. When this bounces, it's going to bounce the same way it used to bounce back here and back there, which I think we're going to get like a 50% bounce for Beyond Meat very soon. On any slither of positivity, May that be like something like the growth stocks rallying or Beyond Meat having some positive news coming out. Keep in mind, any kind of lockdown would benefit Beyond Meat because people are going to stay indoors, and, well, obviously Beyond Meat is not a restaurant. They serve. People get their food from the supermarkets, and if people eat more at home, then that will benefit them quite greatly. CRISPR, I think, is a bit of a. I like it. Price is going lower, but they don't have any revenue, and well, they have some revenue in the past, but not very consistent. It's a very risky stock, but I still like the price that you're paying for it. Historically speaking, you could have been paying a lot more for it, but I would say one of the more risky ones would be CRISPR. But if you have done your fundamental analysis and you think CRISPR is a great stock, that could be a potential interesting stock. SoFi came down to $15, which is like mesmerizing. So SoFi coming down to $15, oversold, incredibly oversold. I think SoFi is sitting at a substantially good support here as well. I think that's it's going to be holding up. Wouldn't be surprised if it just bounces up to 20 again in the coming weeks. Uber, same story. Uber going down because of the DIDI listing and because of the markets heading down. Uber's been doing phenomenally. If it wasn't for DIDI going down, I think Uber would be sitting much higher. So, yeah, I think as DIDI is going to get listed on the Hong Kong exchange, I think we're going to see Uber shares recover very fast. But yeah, it's sitting not exactly at a strong support, but we've seen it bounce several times near that level of about 35. And we're kind of in that little bearish channel that we can see right here. I do also expect a bit of a rebound in Uber, get back to the 40s in the next weeks. I would say until the end of the year. And then you have Robinhood, which had a lockup period expiration just recently on the 1st of December. And my oh my, did these insiders sell? They sold a bunch of Robinhood stock. And, well, look at this. It's sitting at 21.6. I think it is undervalued. I think Robinhood at $21 versus the market is undervalued. It just went down 20% since that little lockup period expiration that we had. And just look at the RSI. Wow. I mean, that is some selling pressure right there. Severely oversold. On the weekly, I believe it's not oversold yet, but there's not a lot of data because it's been on the market for about 5 months, I believe. So, yeah, this is the chart for Robinhood. I think they don't deserve this kind of treatment, although many people do think that they deserve that kind of treatment because of the whole GameStop situation. I think this is a buying opportunity, really, at 21.6. My gosh. And I said the same thing at 30, which I still think is a nice price to be buying Robinhood at. And so I've been dollar cost averaging this at several levels, including 21.6. And I think if we get any bounce, it will get back to 30 like no tomorrow. So it's just going to be a matter of time here. Virgin Galactic, I would say, is also like ChargePoint, or was it CRISPR? Very risky stock. However, because the price is getting so low, it's starting to get interesting. You can see that it's sitting at a very nice support. Historically speaking, it bounces off that support. You can see RSI is getting incredibly oversold. The most oversold we have seen since November of 2019. That is pretty wild. On any bounce, we have seen Virgin Galactic go up 50% to 100 percentage points. So I would say this would be a risky bet, but I do think Virgin Galactic is going to be here to stay. I think they're going to be doing pretty good in the coming years. So I've been buying Virgin Galactic from about $16 to about $14 quite heavily, potentially for a swing trade, right? I do think we're going to get back to the 20s in about a couple weeks from now into the end of the year. Then you have Alibaba, which, there was delisting fears because DIDI was going to get delisted. I still believe the fundamentals check out. The company is doing pretty great still. Not as great as what we've seen in previous years, obviously because of the Chinese ruling and because of the security issues or the tech crackdown that we had specifically. But I do believe that this is panic. And when you get panic selling, you get these oversold prices, and it's just very irrational. I would never ever thought that Alibaba would be sitting at 111. I'll be very honest. I think this is caused by the delisting fears, which we have had delisting fears since 2018, I believe, and nothing has happened. DIDI is going to get delisted because DIDI made some big mistakes with their IPO. And we already knew that DIDI was potentially going to get delisted. It was a risk factor. And so just because DIDI is getting delisted doesn't necessarily mean Alibaba or NIO or any other Chinese company is going to get delisted. But there's a lot of FUD going on. I mean, it's been like this for many years. So I think this is a great time to be nibbling at the dip on Alibaba. And I have been buying at, I think I've bought the dip of the dip, right? I bought at 109. But yeah, we'll see. We'll see what happens with this. Lots of fear going around with the Chinese stocks, eh? And DIDI is going to get delisted, which I warned about just a couple days ago. I was like, I'm going to sell out my DIDI. There's no way that this is going to turn out to be good short term because they're going to delist them, get it on the Hong Kong exchange, and well, there you go. DIDI is sitting at $6. It's very unfortunate. I still think that the company is great, but things sometimes are the way they are. This was the worst case. I will be buying DIDI stock if it gets on the Hong Kong exchange, but that's probably going to take some time. There's so many stocks I want to be talking about. Oh my gosh. I like Nano to mention, Facebook at 306, which is pretty great. Palantir at $19. I think it's going to get back to, close to 25, probably 23, 25 in that zone. C3.ai, which had phenomenal earnings, went down because I would say a big hedge fund, decided to drop C3. You can see that the volume is the highest we've seen since the IPO, which is very irregular. That doesn't happen very often. But yeah, that's my opinion, right? These are the stocks that I'm focusing on. NIO is one of those. NIO at 32. NIO at freaking 32. Let's go. NIO sitting at $32. We have NIO Day coming up in about 2 weeks. I think it's phenomenal. So these are some juicy dips. And I think markets could rebound. There's like a variety of things I think could be happening here. We could see a bounce and then another downturn. Or we could just bounce off and not look back. What I think is going to happen probably, I think the most likely thing that would happen is a bounce and then a further downturn. And then we go back up. Why do I think this? Because there's a lot of FUD. There's a lot of, I would say, bearish stuff also going on. I'm pretty sure that the result is not going to be very bearish, but it's just people want to sell into these bearish catalysts. So something like this, get back to 16K and then get back down, and then we rally until the end of the year, mid to end of January, and then we probably get another correction. I don't think it's going to be a crash. I don't think it's going to be a 20% downturn. I think the highest probability here is like maybe a 8 to 10% downturn total, and for us to just see a recovery into the until the end of the year. And look at the VIX, man. Like, holy moly. Look at the VIX. Like, VIX is sitting at 30. That's the highest point we've seen it at. We've had the highest point since February, right? irregular. But yeah, I think the VIX will probably go down if markets do consolidate or rebound. All right, I don't have a lot of time right now because I'm going to be doing the Patreon Q&A live stream. If you're at all interested in joining the Patreon Q&A live stream, then make sure you hit it up. You can join through this link here in the live chat. You can support me on Patreon, and you'll be able to get access to the Patreon Q&A. We do these Q&As once or twice a week, depending on what's happening. Today we're going to do a Q&A live stream. We'll have another one on Wednesday. But yeah, have a great Sunday. We'll be back tomorrow. And for the patrons out there, I'll be setting up the stream right now, and we're going to do the Q&A right now. Thank you for watching.